The text messaging part of Grower's Edge is very handy because every day I'll receive a text that shows me where the best local market is.
That's what I like about Grower's Edge too. It gives me the information I want on my smartphone so that if I'm not in the office, I still get the information that I need.
Good afternoon, welcome to GrainTV. My name's Cody Bills. Today is the 17th and the market was moving higher here. It is, of course, Wednesday, so we did have ethanol out. Let's turn over to the iPad and see where we closed off the day. Corn trading up 2 1/4 cents, soybeans up 2 1/2 cents, and wheat in Chicago leading the charge higher here, up 25 1/2 cents. Now keep in mind, wheat in Chicago continuing to benefit here from the woes out of Russia. Out of Russia, we had the Veterinary and Phytosanitary Surveillance Service announce that they are limiting and restricting certificates for grain exports to some countries. This is putting more talk out there that they're going to continue to look for ways to curb exports. With that being said, countries that need this wheat are going to look elsewhere to source it. And that, of course, means that the U.S. perhaps could see a continued increase in export demand. The bottom line here, though, is that at these price levels, we have not seen a whole lot of interest for Chicago wheat. Of course, this is something that we expect to play out a little further down the line, but I would suspect that this rally in the wheat market is getting a bit overdone. We are probably seeing very positive feedback here, and when you have these sort of positive returns, it does bring trend following funds into it, which can lead to perhaps some overdone moves. I would say if you're a producer out there and you're saying, what do I do now? I would look at this 25 1/2 cent gain here today as a gift. Perhaps go out there, take that additional 25 1/2 cents that's added on to price here today that wasn't there yesterday, and look for a put option to protect some of that downside if we do see some of this premium sucked right out of the market. This is a sort of geopolitical event, and so we may, you can always get these sort of turn of events where a premium that drove prices up so sharply gets sucked right out of the market in the matter of days. So keep that in mind. I think this is a great opportunity to price some of that wheat if you haven't done so already. And if you want to leave the upside open, I would recommend getting a put here, protect the downside. Let's talk a little bit about corn, because corn traded a little bit higher here today, up 2 cents. We did have good, strong demand numbers out of the weekly ethanol production report. We were up 2,000 barrels per day. That puts us at 990,000 barrels per day that have gone to ethanol production. Look at this ethanol production chart. You'll see the green lines representing ethanol production on a week-to-week basis. This is fantastic. This is a marketing year high. We continue to see strong demand, but of course, with the energy sector having sold off as much as it has, there is concern out there that the margins for ethanol production could start to get squeezed in the next couple of months, and that left the USDA really leaving ethanol production, or corn used for ethanol, unchanged here in the December report. So the bottom line here is, when you look at ethanol production, yes, we continue to see strong demand in the near term, but we're looking out a couple of months, and it's less certain whether or not the margins will be there. Let's take a look at soybeans here. I know that a lot of producers called in. They said, boy, soybeans was taking it on the chin early on, but it was able to turn around. What does that mean? Well, when I look at soybeans, I would say that when you look at the daily chart, notice I have a number of moving averages on here. The two moving averages that I think were very important today is the 100-day and the 50-day moving average. Keep in mind that the 100-day moving average right now stands at 10.14. When you look at the 50-day moving average, it stands at 10.13. Both of those, the 10.14 and 10.13, are going to provide significant support, especially when you get those two moving averages very close together. We did not have enough news here today to blast us through that support. I think we went down. You'll notice the low was about 10.15 on today's price action. I think we went down. We touched on it. We went back up. We closed for the most part unchanged, up about 2 cents. I wouldn't be surprised over the next few days and even into the next week that we kind of hang around this area, especially as we go into the shortened holiday week here next week. It would be maybe difficult to break through this support. But if we do, which I would suspect down the line we will most likely break this 100-day moving average and the 50-day moving average. And the reason I say that is simply because South American production is coming along very nice. Now we have basically a 4% increase in acreage down there. We have the crop completely in the ground, so the planting season is over. The crop is rated 75% good, 25% average, so that's very positive. Farmers who started out really with a crop that was very dry are now very satisfied with their overall production so far and how the crop is developing. That to me says that there's not enough concern in South America to put a significant risk premium into this market. With that being said, we are getting rains in the Parana region, and that will be occurring in the 15-day forecast. That's going to continue to help crop development down there. I think that's going to put negative pressure on soybeans here going forward. So with this being said, right now we're in this sideways pattern. We've been trading in a range since the end of October. I think there's a very good chance that we start to break and cup over here as we move toward the end of the year. Let's talk a little bit about wheat. We talked about this earlier on in the show. I just wanted to show the chart. You can see it's very exaggerated bounce that we've had in the last, really the last couple of months. Of course, really getting exaggerated in the last few days. I think this is an opportunity for producers to get out there and look at pricing, or at least putting some sort of floor in on their grain. If you have any questions or you want to view what the prices for different strike prices are for puts, give us a call. We'll set you up with a demo, and it's very easy to go through all the different strike prices for a specific wheat contract. And I will personally give you a walkthrough and make sure that you feel comfortable looking up those strike prices, looking up the bid, the offer, the open interest, and finding out how you can purchase this on your own, at your computer, or even on your mobile phone. So I look forward to hearing from you. Give us a call at 877-472-4607. Thanks a lot for tuning in. We'll see you here Thursday for the Export Sales Report.